Welcome everyone to Live Trading Action by In the Money Stocks. My name is Nick Santiago. Today is June 13, 2018. Thank you all for tuning in. What I'm going to show you today is how I use a trailing stop. And I've been receiving quite a bit of emails from members saying, hey Nick, can you show me how to use a trailing stop? I'm really not sure what to do. Where should I put my stop loss? What should I do? And I'm going to just walk you through how I like to do it. And I do this very often on an intraday basis, but I'm going to show you on a daily chart with the spiders. And you can see that the spiders put a nice low in here in April, right on April 2nd. They also put a higher low in on May 3rd, and they've been riding up. Here you can see they were choppy for a bit, and then they rallied up. Well, let's just say that you caught this low right here on April 2nd. Somewhere, somehow, you got in the marketplace, and then you've ridden this up, and then it's come down, and then it's rallied back up. Here you can see how it's based, and now we're all the way up here. So just say, for instance, you've been riding this out, and now that you say, hey, we're coming up into this big double top here, where should I put my trailing stop in? And what I like to tell members is I like to usually go back a couple days, 2, sometimes 3 days, but more importantly than that, I like to look at where we had a nice advance. And you can see right here on the 8th of June, the market had a pretty good advance. The low in that candle here, right where my cursor is, was 276.66. The high was 278.25. So you got a nice little pop there. So that's going to tell me that it's going to take some energy or some force to get through that candle on the downside. Now, if you take a look back a couple more days, you're going to see that low right there was 275.09. The high was 277.52. We closed basically on the high on this day, so that would take a lot more energy to even get through there. So that would be a place where you could put a trailing stop in place. So you could use either one of these candles. It really just depends on how conservative you want to be or how much wiggle room you want to give the marketplace. But I generally like, when you have an uptrend, to go back to a nice wide range candle 2-3 days back, put a stop right below there, and then you can just any close below there, you move on out. One thing I would recommend as well is to not show your hand to the market. That means not putting a physical stop loss into the system. And as long as you do that, you'll see that generally you're not showing your hand and you're pretty safe. But if the market does happen to sell off in a sharp manner, hey, any close below there, you move out. Sometimes it could be a little bit lower, but either way, you're protecting your gains that you had all the way from May or April, wherever you got in, and that's the best way to go about it. Now, let's say, how do we put a trailing stop in this choppy consolidation? That's pretty important. So we're going to look here at this pivot. You'll see this is where the market broke out, and you're going to see that this is where this candle right here is the significant candle, because this is the May 9th candle, and what you'll notice is that price got above these red bars right here. That's a sign of strength. Not only did it do that, but it also got above that red bar. So that's telling you it took a lot of energy to get through there. There was actually some strength, despite the volume only being 59.6 million. It took strength to get above that pivot. So what happens when you come down? You'll just go ahead and test this green bar, but you can see how you never close below that low, which happened to be 267.09. So that would be a good place when you're in a consolidation pattern to put your stop out, or to put your trailing stop right below that low. And you can see we never took out that low on a closing basis. This tested down here at these lows, and then it rallied right back up, and it finished right around 269.02. So all in all, then the trend reversed right back to the upside. So you can see little shakeout before the fake out, and then a move right back up. So that's how I like to use a trailing stop. Again, there are some different variations, but I think this is probably the best method. Look for prior pivots, look for wide range bars, and put your stops right below those. With that being said, everybody, I want to thank you all for tuning in to Live Trading Action by In the Money Stocks. Again, my name is Nick Santiago, and we will see you on the charts.